Welcome to the Dividend Talk podcast, episode 72. Another set of popular quarter three earnings. What's up, guys? Welcome back to another episode of Dividend Talk. We're almost to the end of the earnings seasons, but we really still want to talk a bit about some very interesting earnings this week. And with Dividend Wave as a guest today, who can definitely give us some great insight in some of those. But hey, let's get started. See you on the inside. Yo, Dividend Wave, long time no speaking here on the show. How are you doing?
All great, EDGI. Long week, but I'm very glad and honored to be invited again to the show. And
Yeah.
thank you. Big shoes to fill in for our own EMF. So I'll do my best without the Irish accent.
Yes, exactly. So EMF couldn't make it today. He has some things to do at home, so it prevented him from recording the podcast today. But EMF, if you're listening, I'm really looking forward to have you back next week again. But today, Dividend Wave will carry the show for us. It was a crazy week. If you look at earning seasons, the stock market, was there anything that caught your attention this week?
Yeah, sure, EDGI. So look, it's amazing these earnings season and all the events. You have numbers flying out above expectation, below expectation, better, worse than previous year, and then obviously guidance and so on. And what really caught my attention this week was uh, the uh, the sentence that you usually quote, and I really love it, which is it's a market of stocks and not a stock market. You've quoted this quite a few times in the show, and this week is just the example of it, right?
Yeah.
We had Moderna and Peloton, part of the Nasdaq 100, and they fell more than 30% for the week, and they're actually 50 and 60% down from all-time highs. And so it was crushing, right? And
Yeah.
yet the Nasdaq is at an all-time high. So there you go. That's
Wow.
the perfect example of your quote.
Yeah, and what is really interesting here, right? A 30% drop, right, means you need to recover 50%
Right.
in growth again, right? These are numbers. I mean, and then when you think about Peloton, I mean, in the end, it's a bike with an iPad, a really nice one, right? A really beautiful one.
Right.
But wasn't it the ultimate pandemic play, Peloton? And now that the summer, who wanted to buy a Peloton in the summer?
Exactly. And last year we were all stuck at home, so a lot of buying last year. Probably a lot of people who wanted started the beginning of 2020 staying at home, saw the
Yeah,
consequences of it, the fridge nearby, and so on.
yeah,
Uh, less time outside, so definitely a big hurdle for Peloton.
yeah.
I honestly, I'm not following the company, so I hardly can tell you the details. I just saw the headlines, but the numbers didn't look good.
No, but this is typical popular growth stock. But you know what it is with these growth stocks? They can make you a lot of money, right? But there's this concept of moat, and I wonder if Peloton really has moat. It has an A brand within the industry, but it's probably not sticky enough if it can have such a numbers, right? And this is really where the proof of the pudding is in the eating, I think. It might recover again, of course, when we have a tough winter, everything, but I think the hype, is out of it now, and maybe it gets to more reasonable levels now that we, because there's also the thing, right? In the end, it's a weighing machine, like Benjamin Graham said.
Exactly.
In
Yeah.
the end, they start following earnings, whether it's growth stock or not. Because what means a growth stock really? Is a growth stock another word for justification for an insane multiple? Yeah.
Yeah, that's what everybody is chasing, growing whatever
Yeah.
Before profits or before free cash flow comes to the balance sheet, everybody is chasing good growth stories, and I think everybody is attracted to it. It's there's something interesting about it, right? And but it's another world that I don't understand as well, and it's
Yeah.
I have a few small bets here and there on growth, but just going by price or the price to sales ratio already makes me itchy, I can tell you.
Or balance sheet optionality. No, I mean, I really have I look at it like this. I chose dividend investing. It's my circle of competence. I hope really that everyone makes money in the stock market. And we were talking a bit before the show about crypto investing. I get a lot of questions from crypto investors. Somehow I feel that they're pushing me into this. Look, I have a lot of respect for people that make a lot of money with crypto. Here, I just would like to see that people are a bit more humble and respect that other people might have other investment strategies. I'm probably more like a boomer. I like cash is king. I want to see the money coming in. It's like ka-ching every day when I get a dividend in. That makes me joyful. I wouldn't know how to deal with growth stocks. I don't know how to sell, let alone understanding the valuation of a shit coin or an altcoin or what was the other one, a sheep coin. So
Shibi Inu.
Shiba, no, yeah. So anyway, well, I think it's never a dull moment. It's really crazy times, really nice, and maybe it's time then to go into some of the earnings results. And is there a company that you would like to bring up today? One that you
I would like to go straight away to Pfizer because I was really impressed with the earnings of Pfizer itself, right? We had Pfizer at essentially delivering revenue at plus 130%. So that's insane, right? And the most impressive of it was the 13 billion in COVID vaccines that they sold. So that's actually more than the underlying business that was 11 billion. That's
wow,
incredible.
yeah,
That's really, really an amazing feat. I think getting all these vaccines out, getting obviously then net income. We don't know yet the cash flow because the 10Q is not out,
hmm,
but net income and EPS were whatever 400% up. So that's
yeah,
really insane. But what I really wanted to talk about this company is basically two things. One is an analyst made a very interesting question over the earnings call. He was saying you'll probably be net cash positive by the end of the year. So
yeah,
with all the vaccine sales, they will probably go from net debt to net cash positive. So what's going to be your allocation? And they were talking about a lot of that they will want to be very active in acquisitions and targeting a lot of companies that have promising products. And they were talking towards the back end of the decade, right?
hmm,
Which also makes sense because they probably got these tailwinds for the next 2-3 years between the vaccine and now the announced cure. Let's call it
Bill,
like
yeah,
that. The pill that is here to come and probably will give them a boost for the next 2-3 years. So that looks a very smart strategy from my point of view. And the second thing I wanted to talk about was really the board, how important the board can be, right? Because we know companies where I believe the board is not working at all, like
yeah,
AT&T,
yeah,
and I've been a bit vocal about this. But here, it's actually the very opposite. We have Scott Gottlieb, that used to be the FDA commissioner from 2017 to 2019. He serves on the board of Pfizer. And he was appointed as well to the Regulatory and Compliance Committee and the Science and Technology Committee.
hmm,
So you've got somebody with a huge experience. His background, you can go read it on the press release that Pfizer when he was appointed in 2019. But having somebody that can navigate the system, knows what is the procedure, what are the approvals, what is the FDA looking for
hmm,
when they do an approval, how the story needs to be told, right? Because a lot of it is how you show the data
Yeah,
and how you influence, and you show to the larger public that this has a net positive impact for the individual, for society as a
yeah,
whole, right? And you can see it, and I see it here because I was talking about Moderna earlier, and that it crashed 30% this week, and Pfizer, uh, with the same incremental amount of vaccines, is just keeping getting stronger. And I believe part of it is due to Dr. Gottlieb.
no,
The fact that they have him in the board and his credibility and his public voice as well is helping, because you see the two vaccines side by side. One is only available for adults, like
yeah,
Moderna. The rest is still waiting. And this week we had Pfizer getting a recommendation from the panel to go for children already. So
yeah,
adults are already there, teenagers there, and now children. So this is very impressive that you see a company getting somebody with this stature to the board. And I think more
yeah.
companies should think about the people that they have in the board and what they bring to the table, right?
Yeah, because often when you look at the committees, it's like an old boys network of Ivy League, gray hairy people, right? So, and this is really smart move, and it's also interesting, right? What a gift COVID has been for Pfizer. It's really like the gift that keeps on giving. Yeah, it's amazing, amazing. And I watched the other day a little bit of a documentary about the founders of BioNTech and
Right.
how they started, what they effectively did when they got, notion of COVID-19, like in early January or December already that year. They just, stopped everything they were doing and focused fully on this and on creating this mRNA vaccine. And it was the first time that they were doing this. They went to Pfizer actually to see if they would be interested, and they said initially no. Yeah, so then only like a few months later, Pfizer was starting to be interested. This is really interesting because there must have been someone in the board that said in the beginning, like, nah, these kids there or something like that. Well, this was a really, really well-known person. He and his wife that effectively BioNTech was like a garage kind of startup. Of course, with a lot of funding, they had already a former business they sold, I think, for 150 million. So these were really like on the leading edge. And the corporate culture probably in Pfizer almost prevented them to take a deal with BioNTech. And this is for me really interesting. Um, how this could have also turned a total other way, and now it's kind of a lifesaver for Pfizer and putting it ahead of the game of the whole competition. And
Right.
this is so interesting, right? How small details can really make all the difference here in such a situation.
Absolutely, absolutely. I think you're totally right. And I've read a bit about their story about the couple. It's fascinating as well that they're really science minded. Apparently, they spend countless hours on the labs and so on. So it's
Exactly.
amazing. Their story is amazing as well. And
Yeah.
and the other thing about these vaccines that has gotten me as well to think a lot is exactly what you said. That something happened, that it was BioNTech and essentially Moderna that had zero products before. It's their first product, right?
Yeah.
The
Yeah.
the vaccine is their first product that they have, that they've had approval for. It's But the failure of the incumbents, Merck
Hmm.
and the GSK, they failed, right? They
Yeah.
don't have
Yeah.
they
Yeah.
don't have a COVID vaccine. So for me, that's very interesting as well, that it was the non-incumbents and
Yeah.
a small player like the couple in Germany and Moderna with no product behind that got to
Yeah.
this stage. So very interesting, and that the mRNA is actually delivering, apparently by all that we know, better results than the the classical formulations like Janssen
Yeah.
and
Yeah,
Sputnik.
in the end, I don't know how much people know about it, but in the end, it's just a competition. It's code, yeah, and
Right.
you can code DNA and mRNA, and that's all it is about. And the engineering behind it is really really complex, yeah, and the delivery of it, uh, yeah, into the bodies, it's really really complex. But in the end, it's code,
Yeah.
and this is the breakthrough in science. So now it's more like being able to do it at scale, that's the biggest challenge of the industry, of course. And I think here we see that they have been able to do something here at scale, and that's just amazing. It's like not just a vaccine for COVID, it's also really a breakthrough in the way the world can invent drugs. And that's what it is also about. So, no, really nice story for Pfizer. And yeah, I need to have another look at it one time again. It is this stock that I always shy away from when I see it. But with all this money coming in, it's like you'll be crazy not to have a bucket in your arm on the other end and just catching some of it.
Exactly.
Yeah.
And let's see the 10Q next week. I'm super curious to see where the cash position is at, but
Yeah.
I'm gonna guess it's enormous.
Yeah. Well, only management can fuck this up, so to say. Yeah. Good. So let's from Pfizer, then let's go a little bit to Europe. And there's been, an interesting company I think in the community is Vonovia. Yeah. Who owns a lot of real estate in Germany, politically sensitive with the after the elections as well. The share price has been literally going nowhere really over the last months. It's trading slightly above 50 euro at the moment. But there was some good news. I believe it was like more than a week ago that they got like 86 or 87% of the voting rights of Deutsche Wohnen. So the acquisition, you can also consider that almost done. And they've been actually doing quite well because their funds from operations, that's kind of the free cash flow when you look at real estate investment trusts, has been growing nicely, really nicely, with 12 to 13% year over year. A lot of that has to do with, for instance, how you say it, with new investments coming, how you say it, online, I guess. That's so new projects having been delivered where they can start having people to rent. So the investments are really starting to pay off now that effectively, how you say it, their FFO is growing. And this is really, really bumping their cash at the moment. And so far in the first 9 months, they're already at €2 per share. I expect them free funds from operations to be around €2.50. So in that case, you would get this company for a multiple of 20. I still find it quite on the expensive end here. But in the current market conditions, if you look at where the general indexes are, it's not too expensive. Maybe good to mention that if you think about the analysts, they are more optimistic than I am, and they have an average target price of around 65 euro. People that follow me a little bit on YouTube, they know that I shared or this week research where analysts are generally 25% too optimistic compared to the expectations in the real delivery. So if you discount theirs with 25%, maybe you come closer to the real share price as it is today. I find it really interesting, but I would still like to see it drop a little bit. I find the yield a bit too low for a real estate company. But I know it's really popular in the community, specifically also the German listeners. So it's for me, it's a really high quality company with a really amazing growth track record. But I don't see that the current growth justifies the multiple. So all in all, good earnings, to be clear, good earnings, but the company should grow faster to justify the current valuation, in my opinion. Yeah. And good, by the way, that with the Deutsche Wohnen, they got 87% of the voting rights. I think that cleared really a lot up for the company.
Very good.
I believe you also looked into another pharma company, right?
Yes, I did it. Apparently, it's Pharma Week.
Yeah, exactly.
It's actually AbbVie. So I just wanted, because you guys last week recorded the episode on Thursday, so the results were only Friday morning. And I have to say, I'm really impressed. The company, I'm still scratching my head about, so what wasn't there to like on the call, because Humira was still growing, but the weight as overall for the company is down. So that's a dream scenario, right?
Yeah.
Because they had the two other immunology drugs like Skyrizi and Rinvoq increasing very high double digit and triple digit. So really outstanding, and you can see that they are starting to take with the additional and the supplemental approvals. They're getting more and more applications. So they're taking even share from not share from Humira. That's maybe an exaggeration, but they're building their importance in the portfolio. The other one was the free cash flow. It's insane. So essentially, they had 17 billion in cash flow for the first 9 months of the year, which already surpasses what they did for the full year of 2020. So really, really strong. And one that we will have, I think you and me are in agreement, but in disagreement with our friend Dividend Dane is on the debt. I really like that they've done 9 billion net debt reduction already in this year with payments that seem to be on schedule for the most part. They're coming to a critical period in their history, right? Humira is going to go have competition from biosimilars as of 2023. They're still digesting the big takeover of Allergan, right? So there's still a big digestion moment and a critical moment. So I would not like them to go to the next couple of years with an inflated debt and a lot of debt in the balance sheet, because they may need it. They may need the firepower for more M&A, for other elements to defend their lawyers, to defend their applications and so on. So honestly, I think it's prudent. It's in a risk management perspective. I understand what Dividend Dane is saying about capital. I get it. It's a logical consequence of it, but it's also one of those critical moments of history that I think playing a bit defensive is also positive in this case. And
so what maybe for the listeners that don't follow us too closely on social media, Dividend Dane is saying, like, don't worry about the debt. Even if it's high, it's a simple ABC. As long as return on invested capital is more than the weighted average cost of capital, you should be fine because the company is generating. But to your point, if income will drop, then the return on invested capital figures will start to look worse.
Right.
And this is what we're expecting here, actually. And by the way, a balance sheet gives so much flexibility. When you have a sudden drop of income, and then you need to do your interest payments, you need to do your debt. You can roll over debt, of course, but we might see higher interest going forward. All of this brings risk to the company and to the balance sheet, which the company doesn't need. If it has these kinds of cash flow, I believe it should be in a capital allocation, first focus on debt reductions, then probably even buybacks, and then dividend increasement in the case of this company. I think that AbbVie, if you think about it historically, it was a spin-off from Abbott.
Right.
And effectively this spun off this pharma business here with a main blockbuster, but a one-trick pony. Think about Gilead, a one-trick pony with their was it HIV drugs?
Hepatitis C, right?
Yeah, exactly. Gilead struggles to do acquisitions, proper acquisitions that have this impact. And then AbbVie buys, Botox. It's brilliant from a diversification point of view.
Absolutely.
And then the diversification in the pipeline, and we have been discussing this a lot. So there are really two metrics that I look at: is the share of revenue overall from Humira on a declining trend. I want to see that trend declining, and the debt decline. It's doing this, and also via really smart acquisitions. For me, this management is so far proving to be one of the best managements in the whole pharma industry. I'm really impressed with this.
Absolutely, and I think the CEO Richard Gonzalez has got a magnificent track record already from the Abbott days. I think the pipeline is also where I'm very impressed with how they're managing it as well.
Yeah.
Just over the last, you have to go read the press release. It's really outstanding. The highlights that they do of the
Yeah.
quarter. But even having bought Allergan, they're still having products from the Allergan pipeline. So that's amazing.
Yeah. Yeah.
You
Exactly.
buy another company and they have now a migraine product that is coming
Yeah.
from the Allergan pipeline.
Yeah.
So they have been in uh, they have their ventures that was a similar concept that Abbott used to have. So they have
Hmm.
the AbbVie ventures. So they have many fingers in many pies in
Yeah.
when it comes to having access to um, companies that have promising products and helping them launch and getting the bulk of the profit. A bit like Pfizer is
Yeah.
doing with BioNTech.
Yeah. So for me, people that follow me, I've got already full position for 2 or 3 years. I don't want it to increase more. I bought it around $67 average price, so that was cheap. Yeah,
Yes, it was.
dirt cheap. I think now it's for me trading around fair value if you continue the if you take the debt load into consideration. I think many people feel like based on multiples that it's cheap. I don't think. I think it's for a reason already trading for such a long time around this level. Because if I do my assessment, I come at these kinds of fair value prices that is trading around now. If it would have a much cleaner balance sheet, that would go more cash flow to the equity owners, then it would be a more interesting buy. But the debt is for me keeping the price down at the moment. And yeah, if I would say if anyone doesn't have Upfee yet, they should definitely have a look into it. It gives a nice yield, nice company, well managed. Might be interesting for a starting position, but definitely when it dips further again one time.
Right, and the cherry on top of the cake was the dividend increase of
Oh,
announced last week, 8.5%. So it's not the double digits that we've been used to, but it's fully understandable why the cautious management. So even that I like. So I cannot.
it's a,
It's funny when the companies are kind of delivering. You have a bit of rosy glasses, right? You see
ah,
everything in a more
ah.
compassionate way, and everything seems good.
Tell me, did you get last year an 8.5% dividend? Sorry, salary increase at work?
It did not.
No, no. There you go. Look
So
at what they are doing to us.
exactly, that's how they spoil us, and as long as they keep that cash flow growing, we're good.
Yeah. Well, thanks for bringing Upfee up. It's really an exciting company to keep track on. So then, last but not least, maybe from my side, let's stay a little bit still in the pharma world or the medical world, because also Fresenius reported their earnings, and I really found it a mixed bag. And when you go through their Fresenius, these hospital care, they also own a piece of Fresenius medical care. Generally, these are really well-run businesses, but Fresenius really struggles with COVID-19, and then they mentioned it also in their report. uh, I don't even know, and I don't even understand exactly why it is a headwind. I guess that when the hospitals are occupied with people of COVID, they're probably not so profitable. Also, when people die quickly as well, it sounds really bad, of course, but it has an impact on the business, and it's all over the place in their quarterly report. They expect it also to be worse in quarter 4, so they are not optimistic, I guess, also about I said the impact of the vaccines on society, and probably the lack of adherence to of people taking vaccines or something like that. But it is simple like that. Their management says if the hospitalizations goes up, it impacts our earnings negatively. So, and this for seniors, and that's why they're struggling still this year, effectively with their earnings. They have been raising their sales outlook. Also, they are expecting the earnings to be on the top end of their guidance, but it doesn't come from a high basis. They were already really conservative. So sales grew with 5%, net income with a meager 2% in Q3. And you need to know Q3 is the summer, which is tends to be a good summer, good period for when it comes to COVID. What can I say more about the company? Yeah, I think it is when you think about just simple on the back of a napkin. They earned around €2 40 over the first 3 months. So if you think about €2 40, let another 70 cents with it. Think about 310. You're getting this company probably for a multiple of 12 or 13. Yeah, and that's really cheap. The dividend is really well covered. You get it for a yield of 2.2%. I think this dividend can still grow for many years to come from this basis. So if you're interested in owning some Fresenius, I'm looking at it. It is interesting from a valuation point of view. I just have this threshold of 2.75% for dividend stocks. So I just wanted to dip a little bit more, but it's really not expensive in my opinion at the moment. So let's say consider me potentially a buyer in the in the low 30s. Let's say when it dips below 35, it was trading there earlier this year, around February, March. So maybe after the winter or after New Year, I get another chance if there are again lots of COVID cases.
Okay. Oh, what's the frequency of the dividend of Fresenius? What do you remember? Once or twice a
Um,
year? Well,
I thought once a year, but I'm not entirely sure. With European companies, it's either indeed annual or biannual. Because I don't own Fresenius yet, I don't have experience with
okay.
their dividend payment dates. But other than that, I find it a really interesting company. I think it has a strong moat. This company will not go away anytime soon. It's for me the typical example of a slow compounder, and I like slow compounders as part of the core of my portfolio, because you see like many years ahead whether the business is going worst or not. So it gives you enough time to make decisions and choices.
Okay. Very interesting. I don't know if it's the case of because if you remember last year, there were a lot of company headwinds regarding uh, the delay of elective surgeries, right? Because the hospitals were kind of
Yeah,
taking care of COVID
yeah,
patients, so every other elective surgery or other procedures was
yeah,
I'm saying surgery, patient care was
yeah.
postponed and so on. So there was a lot
That
of
yeah.
I don't know if that's the case.
That's a good point, and this is also impacting big pharma, right? If, for instance, people cannot get treated for cancer because
Right.
the hospitals are full, it doesn't allow big pharma to sell enough drugs. Yeah, so going back to Apvi, it's even
Yeah.
more impressive. So
Yeah, and we had the case of Johnson and Johnson, right?
yeah,
The medical devices part
yeah,
was kind of disastrous throughout 2020.
yeah, and 2021, by the way.
Yeah, it was not
Yeah.
too bad. The last one was pretty good.
Okay. We disagree there, but that's a topic for another time. Okay, so these were four earnings. We know Realty Income had some earnings. There were many other companies, but I mean, we could talk for hours probably, but I don't know if people will fall asleep then after a while. But let's go to the next section. That's a portfolio review. I got a really nice email from one of the Dutch listeners called Dennis. He shared his whole portfolio with us, and he's really interested in our thoughts about this portfolio. We will do the top five here. Um, what he said is like he has a lot of stocks in his portfolio because he's just passionate about following many companies. But to help a little bit to clarify what this top five looks like. So Dennis has 17% in a basket of dividend ETFs. He didn't mention the tickers, but that's his largest position allocated to dividend ETFs. Then Johnson Johnson 8%, so it's ticker GNG. Then Shell 5%, and that's his top three. And then there comes a long list with 4% of 3M, Broadcom, Clorox, Unilever, PepsiCo, Danone, and Realty Income. So let's consider this is top five. And then my question to you is, what do you think about it as a dividend growth investor?
So, goedemorgen, Dennis. I think by the time you listen to this, it's going to be morning. So, I really enjoyed that, and we were talking just very briefly before the podcast. I'm actually very impressed with the top five. I like this ETF approach. That 17% always depends on what's in there, right? And that's always a topic and what type of companies. but that's also, there's always a good starting point, right? And to get to know the weight of the companies within that ETF, it's a very good exposure. And if this is the way to go, get the ETF, then get to know the companies. And I think, I don't know if this is what Dennis was going for, but it seems to let me buy the ETF and then let me start looking at companies that I understand, that I like, that I feel more comfortable in investing. And personally, I think that the top 5 looks very interesting. Johnson and Johnson, super stable, AAA rated. Well, what's there to say? A monster. Shell, we may debate because of the dividend cut last year. A little bit of a struggle with the headwinds, and the company not sticking to the dividend, but still, anyway, I think you've described it well over the last few episodes about the energy transition, a lot of the gas bats, the LNG, right? So the company is here to stay for a few years. And 3M, I'm a shareholder as well on that, and Broadcom, AVGO, I'm also a shareholder. I like those companies. I think those companies, one in materials, 3M, very well known conglomerate, all of this diversity within the company, right? You have that diversity of the segments, and Broadcom as well, quite diversified, and in tech with the acquisition a couple of years ago with Symantec, with security. So great top 5, Dennis. Right?
Yeah. And Broadcom, I think last year, March, I saw it going to 150, and I was thinking like, oh, maybe I should have it. What is it now? I didn't check the price, but wasn't it like now 450 or something like that?
It is.
Yeah, it's amazing. I'm totally with you. I think Dennis, you have an awesome portfolio. I'm jealous on your core of having ETF in there. I think it's a really wise decision to have like Jim Cramer actually always says. I know that Jim Cramer in America is always controversial, but I read his book about Get Rich Slowly or something like that. And he always says the first 10,000, put it in ETFs, have it as your core, and then start building with individual stock picks around it. I like that approach a lot because it de-risks here, and it allows investors also to get used to investing, right? And this is what I like so much about it. He also mentioned, by the way, in his narrative that he's thinking about selling IBM for either Microsoft, Intel, or Cisco. Dennis, people consider me an IBM hater. I don't hate them. I just find them charlatans, liars, corporate frauds in their communication and trying to fool us. I have nothing with the products itself. So, I mean, literally nothing. So that's, I guess, the point. And so for me, I think it's a wise decision. And maybe you should consider just buying the 3 of those. With Microsoft, you get a lot of growth behind it, a lot of momentum. With Intel, you get an undervalued stock. And with Cisco, you get a kind of a, I don't know, turnaround bet. It's a little bit in no man's land, but with a brilliant CEO on top of it. So yeah, but IBM, I think it's wise to consider this.
As of this week, he's got actually 2 companies. He should have IBM and Kyndryl. So
I would sell the one where the current CEO is and keep the other one.
So it's still IBM.
Okay. Yeah. So Dennis, really good, really good portfolio. Also, the other tickers all in there, well designed. I'm quite jealous on some of those positions. So well done. Okay, so then let's go to the next section of our podcast. And the last section today is the listeners' questions. And I think we need to start with Phil. And maybe you would like to try this one, Dividend Wave. He is saying, like, time is limited and valuable. If you only had 1 hour per week to manage your finances, how would you spend it?
It's funny because the reply that I was going to give, he replied immediately after, and Phil said, no, ETFs are out of the question. So because that was going to be my reply. If I cannot track it and I cannot manage it, then I might as well be in ETFs. And I think that's I know, Phil, that's not the answer that you want to listen to, but I believe it's the right answer. if you don't track your companies, if you don't have the time to go through 10Ks, 10Qs, to research a little bit the companies, what can go wrong, what can go right, what are the optionalities of the company, then go for ETFs. But if I only had 1 hour a week, was it 1 hour a week?
Yeah.
I would just I would just try to go through the last 10Qs, 10Ks, try to understand the from their material and their presentations what's going on, because I think that's the fundamental from your core, what's changing, what's going on.
Yeah. Same here, Phil. If you're listening, you don't get to decide what we are answering here on Dividend Talk. It's our show, although you're part of it, Phil, with all your questions. But come on, 1 hour a week, that is for me logging in, searching the ticker, and finding the courage to hit the buy button. That's already 1 hour a week. So what else can you do than an ETF? Yeah, nothing. So it would be an ETF probably. At least it would still allow me to avoid fund managers doing this job for you and raking in big commissions. So I cannot imagine doing anything else than ETF if it's my money. If it was like 100 euros, I would probably just ask my dog to select something. Might even do better actually than my current portfolio. But no, it would always be ETF.
I thought it was Octopus that do this.
Yeah, we have Octopus, I remember, but in the Netherlands it's a gorilla that is
Oh yeah,
outperforming the index every year, or the analysts. So yeah. Good. So the next question, I will take this one, is from Maarten, and he is asking about Rio Tinto. He knew because I purchased it the other day, and he asked me what do I like about them and what is the fair value. So what I like about the stock, and you need to see it in context from portfolio diversification. I've got BHP Billiton in my portfolio. I bought like 6 years ago, and this has been a cash machine. It is not reliable in dividend growth. Sometimes the dividend is a bit more, then a little bit less, because it follows the cycle and the cash flow, and it typically pays out a certain amount of the cash flow. But if I look over time and the dividends that BHP Billiton has given me, it's one of my best payers in dividends. And the same here I saw in Rio. So you have kind of a floor in 3-4% yield, but I believe with the last dividend it was around 9% yield or 10% yield, just because of the additional dividend that they give on top of it. So this is what I really like about Rio. It has strong assets behind it, and with both, and that's why I said in context with both BHP and Rio, we are talking about, for me, owning almost the whole market here in mining, and they have a little bit of focus on different materials, but this is why I like Rio. I find the valuation interesting. I don't anymore know exactly. I thought I bought it 52. I think it dropped after that now, so it might be interesting for me to buy more. I don't know exactly anymore the fair value. I put it in a video. Probably it was somewhere in the high 50s or the low 60s, something like that, because I only buy such stocks when it's undervalued. So yeah, that's why I like it. It will never be a core position. It's a tier 4 position for my portfolio, which means like maximum, I believe, 1% of my portfolio overall. But these are like cash machines and dividends, and that's what I like about it.
and with the green revolution, there's a lot more mining to come. So it's an interesting. It's always an interesting one, and infrastructure bills and whatever is coming. So
yeah. Okay, then the next question is from Thiago, and he is asking, in this case, maybe it's for you. I can take it as well. But what are your top 3 positions in your portfolio?
PMMO and Microsoft or AbbVie. They're very close. So I didn't have time to check, but about this and why. It's the Lynch start where you understand, and that's where I started, and it's still big.
Yeah, it's a good one. So for me, it's also Microsoft. And second one is Shell. Third is Ahold. Microsoft has been long in the top 1 already for 2-3 years. Shell, Ahold are all the time switching with Unilever and some of the other companies. But we have seen the recent run up in Shell, so that's why it's there now. I'm really happy with it. I posted an article today on my blog as well about the impact of dividend reinvestment in Shell, and it's been doing me really well. So that's my top three. And why those? Just because I believe in their long-term prospects. Simple like that. Okay, next question from Forward Dividends, and he's asking about our thoughts about Novartis disposing its Roche stake this week for 19 billion euros, Swiss francs. So maybe I will take this because I've been studying, especially Novartis. Look, I think it's a brilliant move. I know that the Roche shares are currently quite richly valued, but we're talking here about the voting shares, and they had 33% voting rights. And this means that the board of directors of Roche always had to, kind of seek permission from Novartis, and this is not a good position to be in. I think if you look at it from these historical companies in Switzerland, I believe they're just 3 kilometers from each other, these headquarters. But I think Roche is in a much better position at the moment historically than Novartis. So it should have been the way around, not like it is now. So I think it's clever for Roche to repurchase this share. It will bring some leverage to their balance sheet, but I think they can handle it quite easily from cash flow. Probably they will pay it off in the next 6-7 years. And it's Roche has a really good capital discipline, so I think it's a really good move of Roche. It allows them to execute quicker without having like a competitor having maybe the wrong incentives about what Roche is doing as well. So
it's an interesting scenario. I had no clue about this, but when presented the scenario, it seems like a very Swiss, interesting, convoluted way of dominating your competitor. Very interesting. Exactly. I didn't know about this.
Yeah. Then the next question is from Centrino, and it's maybe for you. And he's asking, what's your preferred dividend stock that yields about 5.5%?
Wow. Well, my favorite would be if AbbVie falls below 103. Technically, they would be 5.5. but that's still a big drop. That's a more than 10% drop because AbbVie was almost with the recent dividend hike, they're almost at 5. But if he pushes me, then I'll say Altria. I think Altria will not grow the share price. If anything, it will slightly go down. On the short term, there's a lot of guys. This is me just talking. I have no clue where the market is going to go. But
well, it goes up or it goes down.
Oh, it goes down or sideways.
Yeah. Or sideways, yeah.
Fugazi.
That's the only guarantee we can give. It goes exactly. Up or down or sideways.
But just to say that on the short term, I see a bit of the headwinds regarding the discussions, and that if nothing happens, they will be forbidden to sell their heat not burn product within, or it goes to presidential review. But it doesn't matter. So I foresee some turbulence on the short term. I think it's a company that is still here to stay for a while. It's has some staying power, and it still has the ABI stake that is still there. They took a write down on it recently, but it's still got some value there. So they still can use it either to keep generating cash flow for the shareholders, or get rid of it and buy back part of the company or invest in something else. Who knows? Yeah. But if you push me for above 5.5, MO.
Super, thanks. We have still 2 questions to go. So the next one's from Pinto. He's saying that he has only MPW as a real estate investment trust in his portfolio, and he would like to know which real estate investment trust should we consider at this moment. So honestly, I'm not considering anyone now, Pinto, but I have few on my list that I want to own already for some time. And the first one is Castellum. So once it drops to 200 Swedish crowns, it's a Swedish real estate company. I'm a buyer. I've got already a buy order for like 3 or 4 months. Didn't reach it yet, but it will one time. The second one would be also Realty Income Just. I would like to have it with a 10% discount from where it's trading today. I have already a full position Omega Healthcare, but if I wouldn't have, I would still consider it. It's a high yielder, and it spices up the portfolio a little bit, but over time it has done me really well. And then the last company that I've not bought, but that I could consider if I really pushed myself, would be SL Green Realty Corp. It owns a lot of assets in New York, shopping centers and such. It has an almost 5% dividend yield, and I think it is also still attractively valued at the moment. So these are 4 companies that could be interesting for you. SL Green, you find it by the ticker SLG. Okay, then the last question is a really nice and interesting one, and this one requires a little bit of introduction. And it comes from the Div Collector, and he has an interesting situation. He sold his apartment that doubled over the last 4 years. So talking about investing, who can say that? So that's really nice. And then that starts, I think, now where the trouble starts, because he's going to buy a new house with his girlfriend, and it leaves him with a 70K of surplus. I assume this is money. And as a dividend investor, he knows obviously what to do with this money, but yeah, he's just seeking for advice. Of course, we don't give advice, but it's still advice. What to do with such a large amount, and he finds good to know. He thinks that the stock market is really expensive at the moment, but at the same time, he knows that he shouldn't time the market. So, yeah. What would you do if you get 75K in surplus and you start living together with your girlfriend, or you buy a house with your girlfriend? Let's say like that.
First, I think my wife is going to be jealous about me sharing a house with a girlfriend. But besides that point, I think it's a tough spot, honestly. We were just discussing earlier that the Nasdaq is all-time high, right?
Yeah.
It doesn't mean that it cannot. It will continue. I think over time. I think the stock market has shown us that it will increase. But it's a tough moment, because I've been, over the last 2 months, I've bought almost nothing as well, because in every rational person that knows that they should not time the market, there's a market timer.
Yeah.
So I'm honestly, it's an interesting one, but I would probably start being a dividend investor. I would probably start to deploy into either can be ETFs, like Dennis was doing earlier, like your previous listener. Can be ETFs, can be. I'm not going to rule out a bit of growth, because I had a few bets. Actually, I was going to say my third. If you would have asked me a month ago, PayPal would have been my third largest position.
Nice.
But meanwhile, you see it dropped. But I would deploy it in either ETF, dividend or not. But I would go for dividend growing stocks.
Yeah. So the only thing I would still take into consideration is inflation is really high at the moment. So I would definitely not do nothing. Probably if I would have 75K like that now, I would probably spread it out over like 25K per year, and just buy 2,000 euro per month in dividend stocks on top of what I would already buy for my savings rate. Spread it out over 3 years. If there comes a dip, like a 30-40% market crash, you can take the rest of the money forward. I will probably do it like that. I don't time the market. I don't lose too much money on inflation either by having it on the bank account. The nice thing is, if you deploy it every month, you know for sure you will not deploy it every time in the same stock, because other stocks come down from time to time. We know that Intel is now trading at low valuations. Alibaba came down. Not a dividend stock, of course, but there are all the time some opportunities popping up. For me, for instance, Bristol Myers at the moment is a nice and interesting company. So with that, I think if you start adding 2,000 per month, in this case, I think it allows you still to nicely dollar cost average, and yeah, you have some war chest for when shit really hits the fan as well.
No crypto?
Me? No, 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 no,
No crypto recommendation? No Shiba Inu?
no, no, no crypto. It's not my circle of competence. Probably, I tell you, the first time I will buy a coin, everything will crash afterwards. That's how it goes with me in life. So.
Let me know up front.
Yeah, exactly. I actually have in my office here, I have a picture of the Wall Street cheat sheet, and it shows you a stock market graph, like a share price, a stock index graph, and it shows all the psychological emotions besides it, like when people are in euphoria and such, and
I
then when
think I've
it
seen
drops.
this one
Yeah,
online somewhere.
yeah. So I printed it one time, and it is there to remind me, because when I hear those terms, they're literally written on there, and it shows us a little bit probably where we are. Just the Fed and the ECB, they just killed this whole narrative because they just put a put onto the market that if it wants to go down, they just buy everything like they've been doing, and so it doesn't 100% apply anymore. But hey. Hey, Dividend Wave, we came to the end of the show. Thank you so much for stepping in today. It's really a pleasure for having you on the show. Really, thank you.
Always great, TDGI. Thank you very much for having me. Again, my pleasure. Thank you.
So to all the listeners, don't forget we have also a Facebook page, Dividend Talk. You will find it. I'll put also the link in the description of the podcast. More and more engagement is happening there. We also turned it on private settings so that your friends and family or your wife or your husband will not see what you're asking here and what you're doing with your finances. So join us on Facebook and enjoy the conversation. Have a great day, everyone.